Welcome to Crypto Corner here on Schwab Network. I'm Jenny Horne. Let's dive right into it with today's guest, Jim Ferraioli, Director of Crypto Research and Strategy at Schwab. Jim, let's start off with the macro picture with conflict breaking out in the Middle East and volatility across global markets. I mean, what has first and foremost been the Bitcoin reaction, and do these geopolitical events actually create a tailwind for crypto, or does Bitcoin still trade more like a traditional risk asset?
Hey, Jenny. So Bitcoin has been a good monitor for the market sentiment towards this conflict. When news broke out early Saturday morning, we saw Bitcoin sell off before recovering throughout the day. And really over the weekend, it served as the best way to monitor the market's reaction to this conflict while traditional markets were closed. Having the price recover throughout the weekend provided a pretty good clue as to how the equities market would react when it opened. Sunday night, the futures market opened down, but really not too down at all. And we saw a similar action with stocks on Monday, which ultimately kind of turned around their downtrend there. And so it's an efficient way to kind of track what's going on in the markets when traditional markets are closed. Now, I'd caution some of the activity we've seen the past 2 days with Bitcoin now trading up at $73,000. It's not only driven by geopolitics and macro, and so the past 2 days, the odds of the Clarity Act passing in the Senate have risen. If you look on Polymarket and track it there, and so that's been part of the reason we've seen Bitcoin really rallying the past 2 days. But ultimately, it's impacted by macro. It has its own fundamentals as well. And so kind of balancing the two of those out is what's important. One of the things that we're thinking about longer term, if this conflict does persist and ultimately rising oil prices put pressure on financial conditions, and that leads to a tightening in financial conditions, that would actually be a long-term negative for Bitcoin and cryptocurrencies. Traditionally, Bitcoin has not responded well to periods where financial conditions tighten. So that's something we're watching for.
Yeah, and obviously a lot to look out for. Schwab also just published a report on Ether that suggests it may be better positioned than some of the other altcoins right now. So with the upcoming network upgrades and Ethereum's role as the leading smart contract platform, why do you think that Ether could stand out? And could this be the year that we finally see some of that scalability debate put to rest?
Ether is really well positioned here. The biggest trend recently in on-chain activity and DeFi has been tokenization. If you look across all the major blockchains, there's about $20 billion in tokenized assets, and that's not including stablecoins. Ethereum today has about 16 billion of those. So it's clearly winning the market share. Part of some of the things that have held it back the past few years have been this debates as to whether it can scale to provide fast enough transactions. And while there's been layer two blockchains that have been built on top of this to kind of support that growth, Solana has come along and been to this the second place really in terms of tokenization, faster transactions for a major blockchain. And so we had a network upgrade last year that kind of addressed the scalability and integration with layer two blockchains. We have another upgrade this year, which is going to focus on scalability again. So we think as Ethereum continues to capture market share of these real world assets that are being tokenized, as it continues to upgrade the network, it's going to reassert itself as the leading smart contract platform. And when you look at these positives that it has going for it, you also can look at the fundamentals, and it's really sold off with the rest of the crypto market. The market is still largely a momentum market, and absent its own narrative, a cryptocurrency will trade with the rest of the crypto market. But we think kind of this confluence of tokenization, taking control of the scalability narrative, that might be something that can separate Ethereum from the rest of kind of the smart contract ecosystem. So we're pretty positive here. Obviously, there's a lot of things going against crypto right now. The biggest being that we've recently seen a 50% sell-off in Bitcoin and even larger sell-offs in altcoins. And so again, that lends itself to the larger market cap ecosystems, similar to stocks. In bear markets, you want to own large market caps. Same with crypto.
Okay, so two themes you also highlighted are tokenization and regulatory clarity. We know major financial institutions are starting to really move real world assets onto blockchains, and legislation like the Clarity Act could also create a more defined framework for these digital assets. So, how really important are these developments for crypto, and could they be also seen as bigger catalysts for Ether and maybe the broader market this year?
Yeah, so first, the biggest catalyst that we've been looking for is the Clarity Act. With that eventually getting passed, if it gets passed, I think it presents a shift in narrative. So the current narrative is with regulatory clarity, you'll get institutional investors ready to get into cryptocurrency, whether that's buying it or using DeFi platforms, whatever it be. Sometimes in investing, a narrative is more powerful than the actual truth, because quite frankly, institutions have been entering this space since last year, really with the passing of the Genius Act, which was related to stablecoins. Many institutions saw that as the green light to start entering this space. They could already do it through ETFs. And so, again, I wouldn't expect a huge amount of institutions just pouring in when this act passed, but it's an opportunity to reset the narrative. I think ultimately over time, you will see institutions actually allocating to individual cryptocurrencies as opposed to using ETFs. I do think over time, you will see institutions using different DeFi platforms. But again, in investing, a narrative can be very important, and that can be seen as a way to reset the negative momentum we've seen over this past 6 months. In terms of tokenization, I think that presents something very interesting to Ethereum. Ethereum has different drivers than Bitcoin. However, Bitcoin ultimately is what drives Ethereum's price. If Bitcoin's rallying, Ethereum and the rest of the crypto market cap tends to be rallying. Now, if you look at the different blockchains, Ethereum has higher utility usage. Just looking at last year's activity alone, about half of it was stable coins. About 20% or 15% was liquid staking, and another 15% was lending, so kind of liquidity solutions. And then the balance was really exchanges, so trading type activities. If you compare that to Solana, the kind of the challenger blockchain, so to say, most of the activity comes from lower utility usage, predominantly meme trading. And so while Ethereum may be a higher utility blockchain, ultimately, all of its usage is tied to the crypto market cap. There's more demand for stablecoins as the market cap is rising, because that's primarily an on-ramp from fiat into crypto. There's more demand for liquidity solutions and lending as that market cap is rising, because now the value of your collateral that you can pledge is now a rise. So again, as that rises, you see these utility and usage rise, but as it falls with the crypto market cap. So tokenization is something different. Tokenization is something that shouldn't be tied to the crypto market cap, as institutions want to tokenize real world assets, whether that's things like deposits or credit. That shouldn't be tied to what else is going on in the crypto market cap. So I think it presents an interesting opportunity now that Ethereum could become less correlated to Bitcoin over time, because it has now a driver that's not really related to what's going on in the rest of the crypto market.
Yeah, and that's a really good point. I think also we've seen, like the consistent sort of lackluster performance from Ethereum. So I'm excited to hopefully see that trend reverse. And I think a really good point and good takeaways to, of course, consider when we were talking the broader volatility of the crypto space. But so appreciate it, Jim Ferraioli, Director of Crypto Research and Strategy at Charles Schwab. That's going to wrap up this edition of Crypto Corner. To catch all of our episodes and a whole bunch more market commentary, subscribe to the Schwab Network YouTube channel. I'm Jenny Horne. Have a wonderful week.